Welcome, and here we're looking at the S&P 500, and the Dow Jones and the S&P 500 have slightly different wave counts in the current move down. The Dow Jones basically has more of a corrective move down that could make a new high, where the S&P 500 has a 5-wave structure to the downside, and it will start from here in terms of the 1 and the 2, 3, 4 and 5 here. So that means that it could move up here, the 60 odd percent, and then move down here, so for an A, B and C here. So I'm a little bit sort of, this is the trouble with corrections, you need to sort of allow them to unfold somewhat. But anyway, let's go in and see what we know and what we don't know. The 5-wave structure down for the S&P 500 here on the hourly chart is pretty self-explanatory, and this high here is higher than this one here on the cash market as well, so that's the important point there. But down for 1, back for 2, down for 3, back for 4 and down for 5 as the A wave, and we'll look, the little circle just means that that's between the 50 and the 60%, 61.8 retracement level, so the bottom is 50 and the top is the 60, 1.8. Looking at the just considering this in two parts here, it's pulled back up to the 61.8 area here. So if a headline news comes out, which I don't think there's much headline news expected to tonight, but if that was the case, then that would just work in 5 waves to the downside down into this sort of area through here. Normally the C wave here has some sort of relationship with the length of wave A here. That kind of depends really if the how far, if the C wave takes out the bottom here. It depends on how far this B wave comes up, because technically the B wave can come up to have high retracement levels up here, and if that's the case, then we won't see a really long wave down here. We'll see it more of a flat correction, more of an A, B and C here, and then up from that point. So the length of the wave B pushing up there, if it was a really shallow retracement, then would drop down here quickly. So it's just the personality and common sense really. So two little paths here. First of all, an A wave to here, a B wave to here, and a C wave to here as the B wave, and then the 5-wave move down. Otherwise, from here, we'll just be looking at a 5-wave structure to the downside there. Both are really quite sort of valid. So when I pull into that a little bit further here, we can see looking at the 5-wave structure coming down through here, we can see on this 15-minute chart here, we can see a little 5-wave structure up for there. So we really need to call that wave A, and then back for wave B here, and looking up for wave C here. So this can be an A, B and C for the A wave, or it can be the A, B and the C for the B wave here. So let's just allow that to play out a little bit. What we also can say is that yes, it does look positive through here and things, but if we come back into this area through here, we can start to see that the supply level, supply just means sellers, so from the 1690 or just above that, we can from this little block in here through here, all of this here is the first level of resistance, and the volume would be in through here, because people went long here, and if they're still short here, they'll use that opportunity to get out at break even, so they'll all just pile in through there. So that's why that supply and resistance there is important. So the main thing, I guess, overall is that we arrived at 1700, we expected a reaction, we've got a reaction, and now we're just trying to figure out what we've got here. And as I mentioned before, the first important point is to allow the first move to come down to see what it is, if it's in 3 waves or 5 waves. And in this case, it is 5 waves, so it should develop another 5 waves here. But the conflict here is that the Dow Jones doesn't really have the 5 waves down. It has 3 waves down, which still can be an A wave and a B wave and a C wave. the A wave can have 3 waves in it or 5 waves in it. A B wave is always in 3 and a C wave is always in 5. So unless it's in a triangle, but we don't have a triangle here. So yeah, so let's just look at the Dow Jones for a moment. We're still in the S&P here. Okay, so the Dow Jones, one of the important things here is mentioned starting from the bigger picture, is that we're at the 5,500. We are looking for a classic trading levels pattern through here. We can see that the market was strong here in the third wave here, and then we can see it creeping and so forth. So, you know, profit taking and so forth. So we need it to rebalance. And I don't think that it's actually, unless it's really strong and, you know, good earnings are coming out. And that's the case too, because Facebook had good earnings from their mobile revenue in advertising. So there's, you know, the earnings season is propping it up, apart from the 85 billion bond buying each month as well. So, you know, it can just push straight up from here, but we're just in a place of caution. We could see that it was, you know, it had the arrival, the reaction, the first high above the level, and now we're looking for the ABC correction through here, and we're just trying to figure out how large it's going to be. At the same time, we need to be mindful that, you know, if it does push straight up from here, you know, what levels will we be looking at to buy from? You know, when does the balance line of this correction through here, you know, switch from being negative to positive, you know? So that's something that we can look at here. So, well, you know, we can see that the degrees of wave structuring here that I've got here into the S&P 500, don't sort of worry about that too much. I'm just always exploring different things. So it's just the fact that it's an ABC, so to speak. But what I wanted to point out here is that, well, first of all, talking about the levels, we've got the 5,500 across here, and yes, it was, you know, resistance, and now we look for the first high above the level, and after the first high above the level, there's normally some sort of retest of support, and obviously this is the support zone here where people have bought before. So yeah, and as I mentioned here, we can see that we've got more of a clear ABC structure here, you know, not 5 waves. So you know, it does present a situation that that we know that the move, whatever happens here, that it is corrective, and that high will be taken out in due course. The question is this the A, the B, and the C correction here? We move straight up from here, or we have an A, B, and a C here for the A wave, up for the B and down for the C through here. So, you know, I guess if you're going to go long, you would need that that group there, that 72, 572, which is part of group 2, the 65, 72, and the 80 there. But that 72 is, as you can see, is reasonably important. It's kind of central to all of this here. So support on this would shift the weight to the upside, and that's what you'd be looking for there. Of course, you could get in earlier and work the 15,550, but make sure you've got a bit of development for that there in terms of, have I got something here on that? I'm just checking the chart here. Right, yes, so, okay, so the 2-minute chart here, just looking for from the current low situation here, we can see that we've got a 5-wave structure up through here. So pretty much the wave 1 and 2, and this, well, there's 2 waves in here. So, but look, this is 5 waves to this point here, and then we've got our A and a B and a C here. So because we've got 5 waves here, it means we should get another 5 waves over here. But we do have 5 waves in here, so that could be the end of it at that point there. If that's not the case, then and the market is expanding to the upside, if that is going to be the case, then we would see this as a wave 1 here, wave 2 back to here, wave 3, 4, and 5 up through here, which could get, you know, something like that. So that support on the midpoint here, if you're going to go long, you can see that that's resistance, and that would have to be support, wouldn't it, before you could get the, you know, that just matter of getting the timing right. So it'd have to check. It's got to check in here, check, you know, and, you know, once you can see that it's established, you know, then you can work it to the upside from that point there. The European markets, the FTSE rather, pretty much the same thing as well. You know, we're looking for a wave 4 to pull back in here. It does appear to be in 3 waves here, and we'll look at that in a moment. But, you know, I don't know, the wave 4 here just looks a little bit small. So a little bit concerned, but at the same time, we need to find the point that, well, you know, if it's going to be small, it's going to be small, and we need to trade what we see, and we need to go with the trend and so forth. So we could say that that 6,600 there is a bit of a balanced line through here, isn't it? And if that was support now, after it's tested down here, if it found support this time, then we kind of, you know, we could go with that a little bit. So that being the case, this is the 6,600 through here, and we can see that it, you know, was support and resistance and then support. But we were looking, I haven't got it labelled here, but we've been looking for a little 5-wave structure up through here, which we'd worked out, and we felt that it was going to move down, and we wait for the move down, and the move down here so far, as you can see, is in 3 waves. So to me, that's corrective. Yes, it can enlarge in terms of, you know, an A wave here in 3 and a B wave coming back up and a C wave down through here. That's all possible. So what we need to do is we need to drill in a little bit closer. So we know that the closest largest number is the 6,600. We know that that move up there, you know, has started off strong. It's getting a bit tired, so it needs to sort of, you know, check back in with itself. But the next degree smaller, which would be the sub-levels, which is 10, 20 and 30 here, well, you know the routine. If the 30 becomes the tested support now, especially after it's completed its 5 waves up and had an ABC here, then support on the 6630 would be a leg to the upside, but it's just not that. It would also shift the balance to the upside as well. Even though the balance point, the pivot is at 6620, you could work from that point there. So just drilling into that a little bit further through here, I can see that, well, I can see that we've got impulse waves up here, but it's just not giving us a really nice, clean 5-wave structure. So it can be corrective at this stage as well. So that sort of bothers me. I can see that we've got 5 waves to here, and I can see that we've got a little 1, 2, and guess this is all a little bit sort of dodgy through here. So, but you can see that we've got support there, so you can use that, and you can put a stop under there if you like, and get a small position. If the 10 becomes the support, then you can get onto that as well. But this is where the main point is here, that you'd see some sort of fluctuation across here if there was going to be, and you'd be looking for that support to be on there as such here. That's what you're really sort of looking for. But Group 1 is about building, up in a trade, building in the positions through there. So once the market flows again and volume starts to flow in the during the opening session, that's what you'd be looking for there. So that 6630 would be a safer trade. You can do it from the 6620, and you can even do it from here as well. But this move up here hasn't been corrected, and it would likely push up into the supply area here somewhere, and really kind of struggle from here. So anything can happen from here, and it's good. It's good if it goes up and tests and gets back up again as well. The Australian market, what can we say? Well, I've adjusted the wave count a little bit to start with. So, and I'm looking at both counts as well. So from this low here, we can be looking at this still as an A wave and a B wave to here, and then counting this 5-wave structure up through here. But the change I've done here is I've gone up for wave 1 here. Instead of, we had wave 2 to here, but I'm putting wave 2 here in this low here for an A and a B and a C through here, which takes the next wave 1 up to here, wave 2 to here, the wave 3 to here, the 4 to here, and the 5 to here as wave 3 here, wave 4 to here, and wave 5 up to here. Now, even this wave 5 here doesn't really give me a nice clean 5-wave structure here. It's still a bit sort of dodgy, but I know that things can get sort of cramped up around large numbers, but so I wouldn't go too much off the wave count here just yet. One thing that we did understand is that when we had the arrival here, we understood that we would be seeing, swings across the 5,000 here getting larger, and that means that, we've had this little swing in here. This one here was larger, and this one here is getting larger as well, isn't it? So it does mean that at some point, yes, we could push up here, but at some point we could see a larger swing happening here as well. So it's something that to continue to be mindful of. If we've got a really good support at the top of 30 here, I'll just see if we've got this on smaller one here. Okay, great. So this move down through here yesterday, it appears corrective. This appears corrective in 3 waves, and in a bigger scale, this appears to be corrective as well. So if we get support on the 50-30, then take the break of that to the upside and keep the stop under the 2016 there. So long on 50-30, and if the 50-20 becomes the retested resistance, then you need to you kind of know it's bearish. If you want to short from that point, that's fine, but you can see that these never touched here, so you know that there's orders sitting there, so it's going to create a bounce and a problem for you. But I guess the thing is that if the 50-20 became the retested resistance, then you'd have to get out of your long positions, or at least manage them and, reduce the exposure, so to speak. But the other point too is that, as I mentioned yesterday, Thursday can be the bear day, which I guess it was. So that leaves, and it was on reasonably low volume. So let's just check that actually. I'm just sort of saying that out of, from a guess, because this is a weekly chart here, and you can see that the volume here, we've had nice volume here. We've had all these ones here have been on low volume. It's okay to have this on low volume, this bar here, because it was a corrective bar here, and low volume on that bar would indicate that the market has strength in it, and strength in the way that there's no sellers. Okay, so if there's no sellers, it doesn't need a lot to push it up. But this bar here, being Thursday, finish on Thursday, is not complete yet, and it's up. So we'll hopefully today we'll see more volume than this bar here, and if that's the case, then that's a positive side to the upside there. So and that would be led by banks. So CBA is on track to make new highs, and it is the materials sector that have met the resistance, as we looked at yesterday, from BHP in the US at $65 and BHP in Australia at $35. Metals being softer is the thing that's slowing this down, and that's a bit of the case scenario today as well. So when you've got materials and finance moving in the same direction, then you've got to trade on the SPY or the ASX CFD here. Let's have a look at those commodities. I'm just going to start with Australian BHP at the moment, because we're at the 35 here, the old high, so obviously we can expect resistance there. But what I was saying is that the metals market have been softer, so it's going to help peg this to the situation here, isn't it? So in this situation here, there's a couple of things that can occur. Let's just have a look at those. One is that it reaches here and it has some type of ABC correction here. The other one, it has a smaller one and pushes higher through here, and then has the ABC correction here, and then finds support on here. Either way, if you're trading long from here, you want that 35 as support. That's pretty much the key factor there. The US BHP, if I can bring that up for a second, is at 65, which you know is a medium level. It hasn't reached its old highs over here like the Australian one has, but it's got resistance at its 61.8 retracement level there as well. So I was kind of looking for some sort of reaction there, but I'm just guessing here anyway. But the main point is I don't know how far this is going to come back. It's going to depend on US dollar and metals and, well, just not metals for BHP or oil, of course, but you know, we do need to see, you know, if a market's had its run, then to go in long, you'd only be chasing it. Sure, you might get lucky, but you'd only be, generally speaking, probabilities, you're chasing the market, and therefore, so what we do need is we need to build in trades from the corrective process, and the corrective process is really important to understand, and it is tricky to understand, but the more that the mature the corrective pattern is, then the safer the next trend is, and the more that you understand. And that's the thing with trading as well. You know, new traders tend to look for trends, and because obviously that makes you the money, but at the same time, you know, it is the correction that takes the money from you. So, you know, you need to understand that reasonably well, more the better. Looking at copper here, you know, from this high point up here, it does appear that we have, you know, a 5-wave structure to the downside here in terms of the one, well, not quite that simple. A little bit more complicated than that, but I'll just draw this out for you. So from this point here, it's down for 1, 2, 3, 4 and 5 from that point, and in this point it's down for 1 here, back for 2 here, 5 waves down through to here, 4 to here and 5 to here. So that makes wave 1 to the downside, or the A wave, and the 61.8 retracement level comes in, well, right, with this circle that I'm starting to use now, the 50% is the lower end and the 61.8% is the higher end, okay? So it's essentially, it's a retest of supply at the closest largest number, which is the 320 there. So that's what we're looking for at that point there. Once this is done here, then it would suggest that we would be looking for another 5 waves down through to here. If I've made a mistake, then the mistake would show up as a move to the 320, probably a move back, and then a sort of support basis on here, and then that would be there. But that would also be a trigger to go long on BHP too at that point. So it's good to know what we're looking for, it's good to know when we're wrong, and it's good to know when we need to get into the trade on the short side. So this particular 18 here as resistance would be the downside point here. Okay, so oil, right. So with oil here, as you know, we've been counting 5 waves down through here, which panned out right, and then we were looking for a retest back up through here. Yeah, and then another 5 waves down through here, 4 wave C or wave 3 here. So it does appear to be a wave C here, but at the same time, we just got to be a little bit diligent, because it can also expand further to the downside. In that, yeah, look, I won't go there just yet, but what I could say is that the 104.72 is a retested resistance. If I got this here somewhere, just moving here on a bit more intraday here on a 5-minute chart here. Right, so this is the low through here, and this move that we currently got to the upside so far, it appears impulsive, so that's good. So the 61.8 retracement level comes in around the 104.80. So of course we would be using the 72 here. So that level there, if that became the retested resistance, then we would be seeing more downside from that point there. But what we're kind of looking for is, and of course oil will move with stock as well, we want a retest of this section here. You know, if we've got some sort of 5-wave structure up here as such, then we're looking for an A and a B and a C to test back into 105 over here or into here. What we don't want to see is we don't want to see this situation here. If that's happening here at the 72, then you need to look for a short from that point there. Yes, there'll be a bounce off here and all that sort of off the 104 coming back up and so forth, but that would be the point to look short for. Otherwise, back into 5 here, then you would be looking at 105.30 here for support. So a move up here onto the 30, and then, you know, looking further up from that point there in some way. Yeah, so that's that. So, but it will follow stock, and so you need to take in consideration what the S&P and the DJI are doing. The gold market here. Okay, I just wanted to, you know, this one's got me a little bit not sort of confused, but we need to be prepared for both sides of the market here, you know. And one of the things here is that one of the main things from a trading, well, from an Elliott point of view, this move up here has taken out the low of this wave 1 here. So if that's the case, then this wave 4 needs to go to here as an A, B and a C wave here, and that 5 could come into here. That's either the case there, or the other case would be that this would be a wave 1 here as such, and this bit small, sorry about that, and a wave 2 would be pulling back up into here somewhere, and then we'd see a wave 3 to come down. But I'm not that interested in that situation just yet, because from a trading levels point of view is that the 1300 here is the top of minor group 1. Okay, so this market that's moved up here has done all the right things so far. So it's come up, it's had the arrival, the reaction, and created the first high above the level. So in an odd way, it need to come back and retest this in a corrective pattern, but it would need to stay above the 72 there to do that, and then move up from that point there. So this is where we are with this situation at the moment here. The other situation is that in Elliott terms, we do have this still back up here, and we take this overlapping wave structure on board, and we continue to keep that wave 4 in there. So just drilling back into that a little bit through here, it's this move from this high here does appear that we've got 5 waves down here. We were talking about that over the last couple of days. So that wave coming down here in 5 waves, we have to look at it in both ways. We have to look at it as an A wave or wave 1, and the move back up here is wave 2 or the B wave, and then wave 3 coming down, and then there would be 4 and there'll be 5, or the wave C through here. Yeah, so let's just sort of drill into that a little bit sort of further there. Because we've got 5 here, it means that we should get another 5 over here. But we don't know if that's going to be wave 1, wave 2, wave 3, or the A, the B and the C over here. That's what we're not sure about. So drilling in here a little bit closer in here, this is how I was sort of looking at this here. We as you can see, there's a reasonably clean, 5 wave structure down through here. So we need to look at this as an A and a B and a C through here as a corrective move, and then further down through here. That said, we need to trade what we see as well, and it is at the 1330 there. So if support is found on the 1330 here, in terms of we've got the arrival, we've got the reaction, we've got the first high above the level, then we can expect some type of little correction here. If that's the case, and then it builds support on here, then you need to take that high out there for the long trade. That's trading what you see and trading from the support there. The Elliott situation is suggesting that because of the 5 wave structure here, we'll see some rally into the supply level, which is the supply level in real terms will be this little block of volume here, and that's what it's doing here at the moment. So you need to allow it time to unfold, and understanding the we're looking at about 4 or 5 degrees of Elliott structure here, and you need to trade the degree that is clear to you at the time. And as I've just mentioned, there is degrees of structure here that are unclear, and well, if you've got doubt, well, then we need to stand aside from here. The other short trade that you could take from this point is the 20 here, the pivot within group 1, becoming the retested resistance there. So if you can't work it out across the 330 there, then you would look for the short trade at the 320 there, but do not overtrade. It's just part of building a position that could move further to the downside and eventually having this 1300 as the resistance there as well. So the copper market, the base metals and the precious metals will be moving together, and we do see these current moves here as a rally, and that's what we're talking about within BHP as well. So a larger corrective pattern unfolding, and this is also moving with the indices as well. So when markets tend to get into fear mode a little bit, they tend to work together, and we're seeing that with the bonds market and the indices as well. We're seeing with the precious metal, they're all sort of just, they're all looking at each other. So we know that there's low volume, we know that there's fear, and it's just being sort of propped up on earnings and bond buying. So, alrighty, let's have a look at FX. Okay, looking at the US dollar here, it's still got a little way to go down in terms of we're looking from this point of view here in terms of down for 1, back for 2 here, and then 5 waves down here for wave 3, and the A, B and C here for 4. I didn't know how complicated that was going to get. I thought it might have gotten a bit larger here, but it's moving down quite nicely, so we can count this down as 1 and 2. And this third wave here, I don't think it's finished. It could end up down here somewhere, but we'll see something. If this does hold here, then we'll see a retest of 82 and then another move down through here. So the wave 1 back up yonder was about 1 full point, so taking it from 82.50 down to 81.50, which I've got here, is about right. So because the extension was in wave 3, so looking for a low here, and that would sort of reflect back into the euro as well. I've probably moved along a little bit since I was writing this morning. Yeah, it had. So this morning I was looking at it through here. So and what I pointed out is that this move down through here, across this level here, the classic trading levels pattern where you've got the arrival, the reaction, then it's normally 5 waves up through here, and then the A, the B and the C. I mean, it could have even been in here, the A, the B and the C here, if that was the case, but would be looking for support on 80 on the top of group 1 there, the 13230. So it wasn't the case. Then we got this move down through here, so it made a larger A, B wave in 3 waves and C wave here in 5, and then the move up through here. So in looking at that, and also remembering the situation, that the wave count on the US 30 there, so then we could look at this in terms of, from here we'd look at this in 1, 2, 3, 4, 5 to here probably. So the 1, the 2, and then the third wave would be up through here, and the third wave would be 1, 2, 3, 4, 5, first high above the level, the A, the B and the C, and then the 5th wave up would be about the same size as this guy here, up to here, and then a larger correction from that point here across the 133 there. So it just moved, it's just sort of moved up quickly since I've been writing the report this morning, so I thought that we may be able to get it on top of this one here, or at latest this one here, but it's moved a bit quicker than expected. The Australian dollar, It's still in its trapped within group 1, 1, 2 and 3 here, and it is quite a complicated correction, and there's a handful of possible patterns that it can turn into, from a double zigzag to a triangle. The triangle would see it move. The triangle would see it move from. Let me get this working here. Would see this as well, this in 3 waves to here, and then 3 waves into this section here, then another 3 here, and then down from that point there. So that's a little sort of way off. Look, it could really be anything. I just don't know what it could be. What I did understand is that the 92 here has been the balance line for all of this, but each time it's never really, developed it as an ending of the pattern as a support or the resistance. Even this time here, that yesterday we were looking for it to move down here to 61.8% of that whole move up through here, which it did. It fitted in there quite nicely, and from that we were looking for a 60% move back up, which it has done, but it's actually moved further than that. And this particular wave structure up through here could be counted as an ABC, but it also counts probably better as an impulsive wave. So let's just look at that for a moment. This is what we were looking at yesterday. we were in here, this low here yesterday. So we're looking for that, that support in here, and then a move back up through to here, and that's occurred. But this movement up here, it does seem impulsive. It's really stretching out there in some strength. So we need to understand that a little bit and see how that will develop further, because if that's the 3rd wave here, then the 4th wave for this would pull back, and we'll have a closer look at this. This would be the little 4th wave pulling back in here, and there would be a 5th wave here, and then another 5th wave up through here, and then the ABC here, and then you'd be looking for support on this here. If that was going to be the case, it's either that or it's just going to fail straight from that point there. So let's just have a little bit of a squizzy at that and work out at what point would we be short and what point that we would be long. So looking at it from here, this point of view here to start with, let's just look at it from here. So let me get the drawing tool sort of happening here. So we can see that this is wave 1 here, yep, and wave 2 here. Then we can see wave 3 is 1, 2, 3, 4 and 5 here. So we can call that the 3rd wave. We can call this the A, the B and the C here for the 4th wave here, and this is likely the 5th wave up through here. So we've got this 1, 2, 3, 4, 5 here, okay, and it is a nice strong wave structure here. So if we were, so that's 5 waves, so we could go to the bottom of this wave here and go, this is 1 here, this is 2 here, and this is the 3rd wave here. And if that's the case, then, and this move down here being a 4th wave, it's got a couple of options. The first one is from the bottom of wave 2 to the top of wave 3 here, the 38.2 retracement level coming in basically where it is now. The other side of the coin is that a wave 4 can pull back to the wave 4 of 1 lesser degree, which is down here. So that's a real possibility as well. With that in mind, let's just remove that for a moment. So we know we've got, let's just pretend for a moment that it's going to go to the upside. So we've got wave 1 here, wave 2 here, and this is all of wave 3 here. This would be wave 4 to here, possibly to here, okay? But let's just leave it there for a second, and then there'll be a wave 5 up through to here. And this wave 5 up here would be the same length as this one here. So now we've got a nice 5-wave structure up here, okay? But but there's more to it than this yet as well, because when we look at the low in here, we can see that we've got this structure here as well. Now we could say to ourselves that this could be 1, 2, 3, 4 here, and then 5 up to here. So this is all of wave 1 up to here. Yeah, that's possible, but the problem with that is that this move down through here overlaps the top of this structure here, right? So it gives us an overlapping wave structure. So what I was sort of thinking is this is actually wave 1 here and wave 2 here, and this is wave 1 and wave 2 of another degree, and then this is wave 1 and wave 2 of this particular degree. So there's 2 more degrees of structure here. So when we get to the top here, we would be looking at another 2 degrees of structure. So that would bring us in at this wave 4 here, then another wave 5 up here somewhere, then a larger pattern here. So more to come up here, which makes it interesting to trade to the long side from that point of view. So in terms of trading what we see on the long side, let's just say that this move down here comes into the 38.2 retracement level here. If that's going to be the case, then we'd be looking for support on top of the midpoint here. So we're looking for some type of support on this midpoint of 50 here, the 92.50. Okay, so that's where you'd need to go long from there, and you'd want to try and ride. Yes, the group 2 is going to give you a headache, and the 93 as well. You can take profits and you can work orders up from that point there. So that's one way to go. The other way to go is that this wave 4 here could pull back to the wave 4 of 1 lesser degree. So if it did that, then you'd have to wait for it to have support on top of group 1 here. Okay, so you'd be looking for it there, and then you would be looking at the midpoint as well to add to a position here as well. So if that was the case, then you'd go that way. The other side to it is that normally we would be looking at the 20, the midpoint here, the pivot here, to become the retested resistance to sell it from that point. But I think in reality that would have to wait for the 92 here to become the resistance at this point. You may get in there a bit earlier, but you'd want to really see a nice, you have to pull this apart and look for a nice 5 waves down and a 3 waves back up from that point, and then moving down from that point there. So you'd be looking for an impulse wave, a counter trend, and then moving in from that point there. So yeah, that's sort of, we're in a complicated wave 4 correction. So it just makes it difficult. It's just as simple as that. So it's important to trade within within the sub levels, I guess. But anyway, that's that. If you make heads or tails of that, you've done well. But it is expanding to the upside. So allow it to find its feet and look for support. Alrighty. Well, good morning, good luck, and enjoy the weekend.